The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray. Feeling good, Lewis. All right, we're going to take a look here at a couple of things, and then I have a special request from somebody that I'd like to honor. The first chart we posted in here is for Priceline. We've got this double top, possibly up here at this 1385 level, but we could easily go a little bit higher. Earnings come out on this on November the 9th, I was told, so they're probably just going to bounce around in this area for a little bit, but this is a possibility of a double top in this area. I mean, it's a $1,400 stock. When I first started trading stocks, oh my God, way back in 1965 in San Luis Obispo, California, the largest, highest price stock on the New York Stock Exchange was Superior Oil. It was $1,200 a share. Didn't trade a lot because average volume that time in the stock market was just right at 5 million shares. As a matter of fact, in January of 1966, the stock market made a record volume day above 5 million shares. They do that much in Intel in the first 15 minutes without any trouble at all. So we're going to take a look here at this couple of things. We've got one particular pattern that has popped up this morning in the German DAX, which I certainly like to watch. It's made a 786 retracement from the high back on September the 8th. This is equivalent to the daily chart too, folks, but the 60-minute shows what I wanted to show a little bit better, and that is we're right at that 786. We just hit it just a few minutes ago at 102.58, and it has a little 3 drive at that time. You can see it also has a nice ABCD there at the same level, and it also has a 1.27 expansion of the high from October the 10th. So you go down to October 10th down to the 14th, and you expand that out by 1.27. That also gets you to 102.58, 10,258. So you have 5 numbers coming in. Might not work, but these are the kind that you like to see on your plate, because when they do work, they work pretty well, and the risk on these is, 1 second please, is very, very small. Just give me 1 second to get this chart ready. I've had a request to discuss how I made and lost so much money over the years. Just a second here. I got a little bit of a allergy. Basically, when I first started trading, I was basically I just went long. I didn't know any difference, than to do anything else. This was back when I was young and stupid. Now I'm old and stupid. But anyway, the chart that I posted in here is the theory of what I did during the early 70s when I ran a lot of money up. Well, relatively speaking, $1 million was a lot of money back then. Not anything now, but I was studying under the tutelage of Jim Hurst of the Profit Magic of Stock Transaction Timing. They had come out with a charting service called what was it called? Darn, I can't remember it. Gee whiz. A guy named Ray Frechette brought it out, and you would get your charts, and it would show these cycles on the bottom. The one you're watching now is just a 36 hour chart. 36 30-minute bars is what that is, and whenever the first one would come in, you would look for the second one, and that's what you would be watching for that particular low to come in. Now, if you'll notice on this particular chart, this happens to be the Dow Jones 30-minute chart last night and also early today. And as you can see, it made a perfect 786 down there and a perfect cycle bottom. And so I would buy that bottom, and away it went. You see it went up, it came back, stopped at the 786, and then went all the way up and made the ABCD pattern. So that's primarily what I was doing. That all worked really well until the market started down. And then it was a little more difficult because bear markets act totally different. And you'll see that you did not look that. So I posted the Dow E-mini chart is what it should be in there. I hope it's in there. I hope I did that. I hope it's there now. I hope I did the discussion before. Was the chart up before? No, it wasn't up. I better do it again. Doggone it. I'm sorry. All right, let's go over again. This is what I would, if you look at the bottom here, you'll see these 36 half-hour cycles, okay? And what I would do is I would wait for the first one to come in and not do anything. But when the second one came in, if it was at a higher bottom, I had no idea. This was 1970. Yep, 1970, and I was not into Fibonacci till 1973, 72 or 73, when John Hill started to show me Fibonacci stuff back in 72 and 73. So anyway, I would buy those higher bottoms, and it worked really great all during 70 all the way through 1973, and then the market turned down. And I was still doing pretty good in 73, but in 74, the market started down into the October crash of 1974, and they gave me my biggest lesson ever, because these stocks would, or commodities that I was dealing with, they would bottom just like they were supposed to on the 36-day cycle or 36-hour day cycle, because we didn't have hourly charts and stuff back then. And then I would buy it looking for it to go up about 15 days and then buy it back 15 days later. Well, it would only go up 3 or 4 days, and then it would go down for 21 days or 30 days. I mean, it was a disaster on the way down. But anyway, that's what I did all during that time, and it was very easy to do. I mean, it was easy money. I mean, it worked that way for 3 years. Why wouldn't it keep on working? Well, in 74, it stopped, and that's when I had to reevaluate everything. I found the Gartley book through my good friend Don Mack, and I studied it, and then I came back, and then I have a little bit more knowledge than I did before, and I'm certainly interested in both sides of the market. And when I'm watching these, but we have this number that you're looking at here on the Dow Jones E-mini at 17,181. That's the 61% retracement of the whole move, folks. I don't know if that's going to be the top or not, but that is the 61% retracement. Now, we still have a lot of strength in the market here early in the morning. So we'll see, how it goes, for the rest of the time, and we'll wait and see that. So that's what I wanted to cover. Now, I had a really interesting chart from our good friend John Murphy, and I want to put that one up and show you it's about the breadth, the way he's looking at it. So give me 1 second here, and I'll blow it up a little bit so we can see it just a little bit better, and you'll see that we have completed a ABCD pattern. In fact, we've gone above it, and the advanced decline line has turned up. And of course, he uses the 200-day moving average. Once it goes above that 200-day moving average, it turns up. But if you go back and you look at August or July, you'll notice it went above the advanced decline line in late July, and then it broke down, and then it went back above it again on August 19th. So just because it goes above it for 1 day, I wouldn't put a whole lot of emphasis on it, but the market certainly, has not got much of a downdraft. I wanted to show you what was happening last night. In fact, this is the chart that I wanted to show you again, because this is what's happened over the last few days in the market. If you'll give me a second here to bring this up, it's the same chart that we looked at about the Dow Jones E-mini, but it's the same one for the NASDAQ and the S&P. I just happen to use this one to give an idea of what I was doing. But if you look at the time from back on the 16th, the low that we made when the Dow dropped about 140 points and then rallied back up, you'll notice that each one of those bottoms is a perfect Fibonacci retracement. Each one of them, every one of them is exactly 786. I mean, you have to ask yourself, scratch your head, say, I wonder what that means. Now, I posted into Tiger TV a really interesting YouTube video about DNA and how it's related to Fibonacci, and I think you'd be interested in that. Someone in the den asked me, what does it mean? I don't know. All I know is it's got something to do with nature, and we'll see what that means, but these are just numbers. That's all I know. I'm not way beyond my pay grade to try to figure that out. It's just interesting information that sort of, makes you want to realize that some of these numbers actually, in fact, are pretty important, and you want to be able to, hang your hat on them if you can, and we'll see if that's going to be the case. Right now, we got the S&P up about 10, Nasdaq's up 25, the Dow's up pretty close to 100, I think. 80 or 100, I'm not sure exactly, and we'll see, what happens with some of these things that we're watching. So we'll look. Now we're still having a nice correction in the gold market. We're still expecting the gold to come down to probably the 1157 level, and the reason why is because we had that beautiful ABCD up there at 1192, and silver is also weakening up. It's trading around 1570, so it's off more than 50 cents from its high, roughly $2,400. So that's what we're really wanting to be able to take a look at here. Someone asked the question is, we want to be able to use Fibonacci to understand where we're having a bad week, and then we will turn around. I don't know what you mean by a bad week, because the stocks have been going up, but bonds, the bonds are doing pretty good. The gold is doing pretty good. The euro is doing really good. The Canadian dollar is doing fantastic. So it's been a pretty good week. I mean, stocks have not. You just can't stand in front of these things, folks, when they go beyond these numbers. I mean, that's just not something that you want to do. I mean, it's just really, because they say sometimes they don't work. They just don't work. That's the bottom line. Let's take a look here. In fact, you'll see one here where when these things, if you want to see a really bearish chart, that's coming into some support maybe, is the chart of IBM. And I'll put the long-term weekly here. And as you can see, when it was making its high, way back in February of 2013, can you believe this thing has been going down for 3.5 years when the rest of the market's been going up? If you'd had this chart and it told you where the Dow was, they thought you'd be crazy. But it's just one stock in the Dow, and if it keeps going down, they're going to kick it out of the Dow, because that's how the Dow Jones people operate. If you'll notice the top, it made a beautiful 3-drive to a top pattern. It was a perfect ABCD over a period of almost a year to make that up at around 217. Had a good break, rallied back to the 61% retracement in March of 2014, and now we've got another pattern set up for it to come down into that 130 to 125 level. Okay, I'm going to take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com tfnn.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the New York Stock Exchange Index. As you know, that's my favorite one to look at. It's what the real market is doing. We've completed this ABCD pattern at the 50% level. And whether it's going to stop here or not, we're probably going to be higher again today because of the way the market's acting before the market opens. Of course, we've only going to open here in about 6 minutes, so it's probably going to be pretty strong. We've already taken out the 61% retracement of the cash S&P. We did that. In fact, we hit the perfect 61% retracement way back on February I keep saying February, and I know it's not February. I know it's September. But I'll put up that cash S&P, and you'll see on February 17th, when we had Mercury, moving into retrograde motion, we hit that perfect 61% retracement. We've come down, and now we have actually taken out that high by a little bit. And it's important because we could easily go up to 207, which would be equivalent to about 2060 to 2070 in the S&P futures. We could easily do that. The NASDAQ is not far away from breaking out. So all of that could happen today, and we'll see. I don't have a cycle date in here today at all. Basically, I'm just looking at these numbers. The only one that has my interest as far as pattern completion is that DAX, and it doesn't take more than a heartbeat to make that one not work. So keep in mind. Now we're seeing a little bit of divergence in the bond market. Remember, if we talked about yesterday, we were looking at the bonds down around the 157.09 level, and they've had a pretty good rally in the midst of stocks going up, which is usually unusual because that means there's not any flight to quality. We did make the 61% retracement. In fact, if you look at this Treasury bond chart, over the last week, you'll see that every single rally on this Treasury bond chart, each one of them was either a point or more, was exactly 61% of the previous high. I mean, that's it doesn't happen like this all the time, but this is one of those times where it happened. It just happened for the third time already today. So we'll see, what it's going to come from here. But the first profit objective on this is right around that 158 level. And we should get a little bit of pullback. But if we get much above the 158.14 level, then we'd be looking at something a little bit more, have a little more power to it to possibly, be able to be able to do that. So right now we've got the bonds they're still trading right at that 158, and so they're right at still at that 61% retracement level. So we got the stocks going to open here pretty soon. We got the S&P up 10. The overnight high was at 2035. Don't forget we got some numbers up there a little higher, and we could easily get to that point. So we want to watch it very, very closely. There's about a 10% chance that I might get knocked off the air here because we are in the midst of a huge storm here in Tucson this morning. A big rainstorm has hit the city, and it is very windy and a lot of rain coming down. So I hope I can make it through the show without any trouble, but we'll have to wait and see what happens here. So that's it, what we're looking at. The Dow closed right at the Fibonacci retracement yesterday at 172.17. That was the exact 61% retracement of the whole move down. And we're going to be higher than that today, so that's going to kick that out. But on a percentage basis, the Dow's got to get above, at least 1% higher, 170 points to break that, to take it to the 786 would be my guess. But that's just the way I look at the calculation. So we'll wait and see, what happens with it. We still got the gold under some pressure here. It's down $4. Silver's down 20 cents. Platinum's down $15. We got crude oil is interesting because it's really close to potential of breaking down. If we get it much below $45 a barrel, we're going to have some pretty serious things to the downside. I don't think. We'll see. We'll wait and see what's going on. Okay. All right. Now we need to. We're going to have a break coming up here in a second here. Let me double check here. We got the opening coming up. We won't be here for the opening, but we'll catch it right after, and we'll see how high these things are going to run right away, and then we'll have a better idea what the day is going to be like. We're up. This is our 5th straight day up, so that in itself is an outlier event. But remember, it's just a probability, folks. That's basically it. The only thing that's standing in the way here is a big explosive move to the upside, and you could certainly see that again. Okay, we'll be right back after these few words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the market did open higher. Nothing really dramatic as of yet. Have to wait and see, how it's going to end up for the day here, but we have been up 5 days. The next chart that I wanted to post is I post it as often as I can because I think it's really it's this important because it's a long-term chart going back 15 years. Oh, wow, 20 years. Hard to believe. Yeah, it's been 20 years on this chart. But if you'll notice the highs that were made in 2000, how the market broke down and then rallied back after we had taken out the yearly lows. We did it in 2000. We did it in 2007. And we're doing it now. We've already taken the lows out when we went down into August. And now we've made a 50% retracement here in the New York Stock Exchange Index. With an ABCD pattern. This is 2 months ago, so that's right in the wheelhouse of a potential rally, and so we'll see, what's going to happen with this. But that's the way I look at the market. It's been served me well through the years. So, I certainly think it could go higher from here. No problem at all, because people have no fear in the market at all. We're seeing this in the VIX index. There is just absolute, risk on, do what you want. I mean, there's no risk off. I mean, and that's the way it is. I don't see it quite that way, but that's the way it looks right now. But it is very, very strong, and it looks like we could go higher. But we're 5 days up now, so this should be, some type of a pretty good. We don't have a really good date coming in until October the 26th. That'll be early next week, and we'll see if anything happens, during that time for potential, something to do. But right now, you just really can't sell into this strength without using a stop. That's the main thing. You can sell into the strength. That's no problem at all. But use a legitimate stop. You don't want to have what happened on last Thursday on the 16th, when the market was down about 50 points in the Dow with an hour to go, and it turned and it ran 300 points in 1 hour. And that is, it's very, very powerful buying. Where it comes from is irrelevant. But it happens, and you certainly don't want to stand in front of it. So make sure that you protect yourself, because that's the only thing you can do in these markets, is to protect yourself. No one else is going to be there to protect you. That much I can promise you, without any if ands or buts on the thing. So we'll see what's happening. Okay. Well, the good thing is the DAX is sold off a little bit. It's down about 25 points from where we talked about it earlier. So if you happen to do that, put your stop at break even and let her rip. Maybe it'll work, maybe it won't. The bonds are still at the 158 level. That's right at the 61% retracement. If the bonds get above 158.10, that would signal that we could get a move all the way above, another handle higher up at 159 without too much trouble, is what I would be looking at on something like this. So we'll have to wait and see, what the trading gods are going to tell us. I've had a question about when I talk about the 5 days up. Larry Williams did a study. I've known Larry for 50 years, and he does some tremendous research work. There's no question about that. But he did some studies years ago that showed the probabilities of a market that after 3 days up, it has a 60% chance of making a retracement. After 4 days up, that moves to 70%. 5 days up, it's to 80%. And then you go 6, 7, and 8 days, it goes to 90%. In other words, if the market is up 5, 6, 7, or 8 days, there's an 80% chance that the market is going to correct. If it goes past 8 days, there is no, it could go anywhere. So that 8-day is the real key, and you want to keep an eye on that, because if it goes beyond that, it'll really move. Now, what I use for something like that is the 1.618 expansion. If we go past that 1.618 expansion, then that will tell me that, this is really wrong. And that's part of that Fibonacci spiral that you've seen many times before. It's the end of that spiral as it moves around, expanding, and then it goes out to past 1.618. Have no idea where it's going to go. So those are the ideal type trades when you get those, that they line up, really nicely for you. So we'll watch that, kind of carefully. I'm trying to get our good friend Rich Anderson on the show tomorrow. He has been absolutely swamped. I was able to visit with him in Las Vegas. He was there, and got to spend a couple days with him, which was really a lot of fun. He got to meet a lot of people at TFNN, which was good too. So anyway, we're the market's still up on the day, but sold off a tiny bit. Nothing really dramatic really happening right now. We've got the Dow is up not nearly as much as I thought it would be. It's only up about 36. The S&P's up 6.5. NASDAQ is up 16, and that's about what we're looking at here. We got the DAX is still up about 100, and we'll see what's going on with the other markets. The gold has got down to 1172. I still believe gold is going to get down to the 1157 level, and I believe it's acting really beautifully, folks. We made that ABCD pattern at 1192. If it backs off $34 from that, that's going to take us down to 1158, 1157. So that's what we really want to be watching, the gold, and we'll keep an eye on silver. But you want to wait till it gets there. And here again, this is only the third day down in the gold. So we'd like to look at this on Friday, or probably Monday is better, because you've got Thursday, Friday. So probably Friday or Monday would be the day, to look at the gold. Then you'd be looking at a 5-day down move. So you'd have probabilities on your side. And if you're right at that 61% retracement, the harmonic number in gold, which is the number that you see gold move a lot in $34 and $17 increments, that would be another thing that would tell us that we're pretty close to, something really significant happening. So that's pretty much it. Someone's asked a question about this early morning sell-off from the high, opening higher and then selling off. It means nothing, folks. It really doesn't. That's just normal gerrymandering of people getting in and out of, putting positions on, to try to catch the move for the day. That's all that really is. It takes at least an hour and a half to get everything out of the way so you start seeing legitimate orders flowing, other than that opening burst, which are orders that were sitting out there overnight. Crude oil is very, very close to getting below that $45 per ounce level. Time out. That's per barrel, folks, per barrel. I'm sure the Arabs would like to see it at $45 an ounce, but it's $45 per barrel. And we will keep an eye on what's going to happen with that. Anyway, if oil gets much below that $45 level, that's going to break the bigger 786 retracement level, and that would not be a good sign from a technical standpoint on the oil, because there's not a lot of support between 45 and 43, and below 43 the next support is at the 1.27, and that's at $35 a barrel. And gas here in Tucson, we're at about I think we're at 2.12 a gallon here, and a lot of places across the country are way under $2 a gallon for gasoline, and gasoline and heating oil have been lagging very badly. So that's telling you also that you've had a pretty good move in some of these things, with crude oil not following through with the products. With the products not following through with crude oil when it rallied up to $50, that was telling you there was some inherent weakness in the overall thing, and so you got to be able to, keep that in mind when you're watching the market move. So we're still bouncing around here. Got the Dow up about 50, the S&P's up about 7, and the Nasdaq's up about 15 or 18. So we're still in the midst of it. It's still early in the day. And we've been bullish all week, and why it would change, who knows? We'll have to wait and see if that's going to be the case. Remember, what I'm doing here, folks, is all technical. It's all based on numbers. I'm not looking at earnings or any of those things that people look at. So it's not important that I watch that, because I don't understand it, but I do understand the ups and downs. Well, I think I do better than I used to anyway. And at least I know when to get out of the way, and that's another key thing to keep an eye on. So we will be watching these very, very closely. By the way, if you did do that DAX trade up around that 58 level, we rallied. We sold off about 30 points in the DAX, which isn't very much because it's 10,255. You should be probably getting out of it right about now. Just in fact, you would have. You've got your stop at your break-even point, and that would have got you out of the thing. So we're starting to pick up speed now in the NASDAQ, and I'm able to see the Bloomberg from here, so I can see what's happening with these markets jumping around a little bit. So looks like we're headed higher today, and we're going to be going up to test some higher numbers. How we end up the day, we'll have to wait and see, but that's what we're looking at as we start the morning. Gold just made new lows on the day. I still think we're going to make that 1257 without any trouble in the gold. That's just my opinion, and we'll see if that's going to happen. We'll have to wait and see. The Nasdaq is still flirting with the 786 on the long-term daily, but that doesn't take much to take that out. And with one or two stocks, they can do that without too much trouble. So the market appears it wants to go higher again today after that little sell-off we had just a few minutes ago. It didn't come in at any particular number or anything, but it's something that you want to keep in mind when you're looking at it. So we'll just watch this as it unfolds for the rest of the day, because things are still picking up strong and moving along. We've got see what other things that we want to take a look at that we've got a little bit of power now in the Nasdaq. It's popped up a little bit. It's up about 30, and the Dow Jones up about 65 now. So we're moving along pretty good here to see what happens to some of these markets, and we'll have to wait and see what the rest of them happen to be. Okay. I got a phone call, but I can't get that. I'm just too busy to pick that up today. So there's not you'll have to wait and listen to that ring, folks. Sorry about that. It's my private cell phone, and I didn't have a chance to turn it off this morning. So we'll see. Okay. Someone's asked a question about wheat, and I am really interested in wheat. I had a nice chat with my good friend Jim Twentyman here recently, and this chart is off by 1 day, but I do want to show it to you because Jim watches these lines that he checks on old things, and if you'll notice here, there's going to be a lot of support coming into wheat around the 478 level. That would be an ideal spot, to look at it for a good place to be a buyer, because you won't have to risk very much at that point. We're trading at about 489 right now, and there's nothing else that we have here other than that to be watching for. But that 20-minute line will act like a fulcrum sometimes, and it'll just snap the market up. But the key here is you need to get it down to around 478 in the wheat, and then we'll have a pretty good chance. The grains are still trying to, form some type of a bottom here, finishing up the harvest that we have going on. And, beans are acting okay too. They had a really nice number down there. So we're hoping that they go higher, but if the wheat does go lower, that's a really good place, to be buying it. That's the bottom line of the overall picture of what we're watching right now. So we'll just keep an eye on it and what's going on. And we have let me see, the Dow, we haven't done very much this first half hour, so something just beeped. Hold on a second, my alert just went off. And that is my alert in gold. Well, we just had a nice break in gold. This is color me happy. I'm short this, so I'm glad it's going down. We just broke, in the last half hour, we broke at about 10, 11 bucks. We're down to 11.66 now. We've only got another $10 to go, and we would be there. And we'll watch that very, very closely without any hesitation at all, because I think we got a chance to get gold down to that 11.57 level. We're $10 away from that level right now, and we will we'll wait and see what the trading gods bring after we watch this correction that we have going right down. We got silver is backed off a little more too, but there's not a whole lot in that silver market to hang your hat on. It's only down another 8 or 9 cents, so it's not really doing very much. And platinum's down about $18. Remember, platinum stopped at the 786 retracement on this rally back up when we had the ABCD and the gold. So that's the key, to be watching. Now I need to check. Give me 1 second here. I need to check how we're doing with the New York Stock Exchange Index, because it's opening now, and I want to make sure that we can see, what our opening prices are and how much higher we are. We're hardly any higher at all. Wow. Not much going on. Okay, we take a little break here, and we'll be right back with you.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have been trading almost in a half hour now in the stock market, and we'll take a quick look about what's going on. Actually, the New York Stock Exchange Index opened slightly higher and is now lower on the day. It is, folks, this is a real critical day because of that ABCD pattern that we've completed on the daily pattern in that New York Stock Exchange Index. We also have oil getting ready to break down. Looks like it wants to go below that $45 per barrel level. And so whether that has any effect on stocks or not, I don't know. Nobody else knows either. So we'll have to have to just wait and see, what's going to happen. But we have been up for quite a few days in a row, like I mentioned, and so we are due for a correction. How big it will be, we'll have to wait and see. Every time over the last 5 days that this market has sold off, it stopped exactly at a fib point. I showed you that when we first started the show here on the Dow Jones, that each particular sell-off was exactly at a 786 since October the 16th. And so these days when they come back, they just stop right there, and in a way they go to the downside. We're really close to $45 a barrel now on the downside here, so we'll see if that's going to have any effect with the market jumping around here. We'll wait and see. We've exceeded in the bonds. We've exceeded the 158. We're almost at the 158.08 level. We're 05 right now. If we get above that 08 level, it's got a chance to really turn. Maybe that'll be the thing that makes the market, move to the downside. I'm not sure, but we just need to wait to see how the market reacts to it. Maybe they won't do anything because they might figure it's a tax increase, a decrease type thing. So who knows? Okay. We're going to try to have Rich on the show tomorrow. He can't make any promises, but we're trying to get him on the show for tomorrow. Rich Anderson from Anderson Capital Management. The grains are still acting okay. I would like to buy the wheat at somewhere around it's trading at $4.94 now. I'd like to buy it 17 cents lower. We had a nice buy in it at the 618 at 88, but I'd like to look at it better at the 786. So that's what we're looking at today, folks. We'll live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.